Hello everyone, welcome back to Full Circle Trader. So as we have anticipated, prices did open near the resistance area. However, they couldn't able to hold it for long and they came back down. The another important point here is that this is the second day that prices open and close near this range of candle. So this means that as prices will open and close within the range of this candle, the breakout on the either side will be more imminent. So I think that pressure to the downside is quite visible, and we have 2 days within the range of this candle, which means that the value that this candle has created is probably over, and we might see a breakdown to the downside soon here, because the war is still on, the pressure is still there, and the markets across the globe are still feeling the heat of the war, and things are quite uncertain. So I think expecting the prices to move to the upside will not be a great idea at this point in time. Just clean this up. So the kind of pattern that this market is forming, I think even if it will open and come near to the high of this candle, probably it will create resistance here. And as and when it will catch up with the declining 20 MA, prices will start to move down with more force. Even if you check at the weekly time frame, it looks like that if this week will get closed the way this bar is looking, although we have 1 day left, but let's say if this bar closes at the lower third of this candle, then it will form a kind of continuation pattern, and we might see more downside movement in the coming weeks. So I think Nifty is still looking bearish, and we should not be thinking of going long at this point in time. So let's say, as I mentioned yesterday, that even if you see a strong, a bottoming tail kind of a bar around this support area, which is 16,300, we should not take the long positions based on just one candle. That would not be a wise thing to do. Let this market gives us more and clear evident, the strong evidence that the bearish phase is over, and let it form more bullish patterns, then we will be thinking about going long. And these moving averages comes handy in making the decisions when prices are consolidating or not making the clear patterns. So as a thumb of rule, what I do is that if I have to go long in a particular market, I wait for the moving average to turn to the upside, meaning I want at least one or two bars which gives closing above the 20 MA. For a short term basis, if let's say prices have fall down very rapidly and they left the average far behind, that will give some room to the upside, and we can take position the long positions. However, if this is not the scenario and something like this is forming, then we should wait for the prices to consolidate, make and create a strong base around the support, and then we will take the long calls. As of now, markets are bearish, and in my opinion, if the low of this green candle which will get breached and prices will move down below the support area, that would be a no-brainer kind of short call, and we should build the short position there. Okay, so in Bank Nifty, we have moved below the low of this candle, this short bottoming tail, and I think this market is more bearish, and I have been mentioning this for a while now, that Bank Nifty is clearly weaker than the Nifty. Uh, that can be clearly seen in the hourly time frame, that we have a declining 20 MA, and prices are making continuously lower lows and lower highs. Now they are kind of creating they are trying to create a base around these levels, And I think when more negative news from the war will come out, it will gonna break down and will move down further. In the weekly time frame, we can see that there is nothing to the left that can stop the prices to move down, and we have a strong support around 34,000 level. And I think this is gonna touch the support uh, probably this week or another week. However, this market is clearly looking weaker than the Nifty. So I also mentioned yesterday that if this market will gap up, and when it will form a strong bearish pattern, that would be a no-brainer to go short, and that is what has happened. Bank Nifty opened higher. However, as and when it catches up with the declining 20 MA and this resistance area, and if you remember from the yesterday's video, I have drawn a line here, and I have mentioned that when prices will uh, come to this resistance level, it will gonna react, and it has reacted very strongly, and prices came down. So in the 5-minute time frame, you can see that this is the first decline. Then it has given some spaces here to build the position. This candle was one of them, and when the low of this bottoming tail got breached, this was the another location to go short in this market. So I think overall, both Nifty and Bank Nifty are looking very bearish. So as they breach the low of the previous candle, we should build the position to the downside. I have also mentioned, a couple of times that the first point of reference for the support and resistance is the previous bar, right? So let's say if prices open tomorrow and they break below the low of the previous candle, that would be an indication that prices will remain, bearish. And whenever we get a strong bearish pattern in the short-term time frame, we can build the position there with a proper risk and reward. Now let's just see that what is happening on the other markets. So we have crude here, which is continuously moving up. It is around $112 a barrel, which is very expensive for the developing markets like ours. We know that India is highly reliable on the imports of oil, so ultimately it is not good for our economy. Then we have gold. So gold is being considered as a safe haven, a hedging product, and it has clearly came out of this big range that it has created, and this market is telling us, plus the crude oil is telling us that people are not feeling safe investing in stocks and equities, and probably they are coming out of it and investing their money in the safe products like gold. So all in all, it is giving us a picture that it is right now, it is not safe to go long in the stocks. So even if you have a very strong conviction in the very strong companies, probably this is the time where you should read about the company and the stock, but do not jump on investing on them, and especially with a good amount of money, because we never know, like tomorrow if a more negative news comes out from the war, probably this market will crash a lot, and we can take these short trades, scout trades based on the day and how it is progressing, but we should not thinking of going long for a long term. Let's just see what is happening on the interest rate front. So this is the 10-year government bond interest rates, and we can see that the interest rates is rising. So this means that when interest rates are rising, they are inversely related to the price of the bond. So all in all, we are this is the time that we should analyze the markets more before jumping onto it. We have India VIX, which is around 28. So it has eased off a little from yesterday, however, still outside the comfort zone. So that's it. If you have any questions, ask them down below. And if you're learning from the videos, please do give it a thumbs up and please subscribe the channel. So catch you in the next session. Take care. Bye-bye.